Hello, everybody. It's Sunday. This is a monster show. Ready for a hell of a walk in the park because it's coming. This show today is an interesting set of questions that tie in mostly how do I accelerate my path to retirement and how can I reallocate my bags and what should I be aware of and real estate renting versus buying and when will MicroStrategy hit 400, how to get exposure to AI stocks and ton more. 54 big nuggets coming your way, as well as some models you have not seen in a while. Thank you as well to Team Tesla, Sean Donnelly, K8, CERN Dragon, who did I miss here? Mortello, CERN Dragon, and Goal. I don't know what Goal is. Anyway, thank you all for coming. Let's get into it. I'll try to keep this short, but there's a lot of stuff to get to. And of course, I'm just a guy on the internet. And all the questions come from the IA community on Patreon. Huge shout out to the community. Love you guys. Love working with you every minute of every day. Let's get into the first question. And this is from, let me see, Nate Rhino Chiro. Hope I got that right. Last post was 12 months ago. Thanks for coming back to post again. A very subjective question. I'm interested in a general threshold of retirement income for a self-employed single 57-year-old looking to be at a point choosing to work. If I want at 60, what would be the amounts of Bitcoin SOL MicroStrategy to be at a super solid upper middle class in the Western United States? And thank you for all your fabulous time and effort, dedication to your flock. Thank you so much. By the way, I have a lot of friends in the Bay Area in their 60s, and they were asking the same thing. So I'm wondering, are you one of those guys? Probably not, but everybody is thinking about the same thing because everything is changing. Now, I'm going to start this story off with some alarming information, just a little bit of shock therapy. Then I'm going to tell you some good news too, and what you can do to make it possible. But this whole thing bleeds into all the other questions today too. So thank you for sharing. And Shark Lover, you're amazing. Shark Lover, we all love the animals here. First of all, some tips. Okay, this is going to be a little bit of a cold bucket of water thrown over you. First of all, try stretch out to 4 years, not 3, because I do believe 2029 will be revolutionary for AI and crypto. Remember, everything is cyclical. And the longer you can delay retirement, the more you can keep your money in the market, the more you get. We'll touch more on that later as well. Also, shocking, but looking at Western United States, upper middle class, some of the numbers are alarming. You will need 160 to 240,000 annually to support your upper middle class lifestyle. And you cannot be all in on crypto. That's too risky. All right, that's too risky. You got Bitcoin, you got MicroStrategy and SOL. You are too overexposed to Bitcoin and crypto. Also, you need AI and you need to find a cheaper domicile. So literally, even just moving somewhere that's 40 miles away or moving to a tax-free place or whatever, you can still be in downtown LA or San Francisco. Well, maybe not LA because of traffic, but anyway, think about controlling the burn, but we'll get into that more. So if you do want to execute your plan, which is basically in 3 years, by the time you're 60, have that upper middle class expenditure, this is the shock piece. All right. I'm not going to sugarcoat this, but I will show you a solution that makes it easier. First of all, you would need to drop 3 million now. You would need things like 10 Bitcoin worth approximately $1 million, about 3,000 SOL worth about 500K, about 1,700 MicroStrategy worth about 500K, and about 1,700 shares worth about $1 million. There's a problem there somewhere. There's a problem with my math. 1,700. The 1,700 shares of Tesla is incorrect. It should be around 2,600. So I just, in my mind, there's a little typo there. So about 2,600 shares of, or maybe 3,000 shares of Tesla to be safe. It is 3,000 shares, yes. So forget that. That's just the alarming situation. And this would get you to 6 million. And this would help you spend $200,000 a year for the next 30 years in a very comfortable upper middle class retirement. I won't show the model behind that because it's a bit of an eye chart, but that's 200K indexed for inflation over the next 30 years, 6 million in 3 years to be able to retire that. That would get you there. And that's super sandbagged for a super spenny existence in Western United States. Now, the good news, if you can control your burn, because this is a big story today, and we'll touch on this in many areas, the Economic Policy Institute believes you can retire well on $2,900 per month. And that's for a couple. You're single, so you're good there. This should definitely work. Now, I always add a 70% load to this number, so you need about $5,488 from 2032 onwards. Now, again, that amount of money can depend on many different factors. How you want to live, what your existing overhead is, do you own or buy? We'll talk more about that later too. See, everything will bleed in together. But what would it take to get to this level today? Not 3 million, but actually a lot less. If you can wait a little bit longer, and that's the point. If you can reduce your overhead and be in the market a little bit longer, you can make a lot more money. We'll talk about that too in a second. So if you can push out to 2032 or even 2029 or 2030 and you can control your burn, you need far less. You only need 396K today, not 3 million. You need 1.26 Bitcoin. Okay, and these are my Sandbag targets. And that will take, you need about 323 shares of Tesla, 312 shares of Solana, and 382 shares of MicroStrategy to get you to $1 million bag in 2032. And again, you'll stay in the market, but you'll only sell a portion of your portfolio. If you've watched all my Retire On videos, you know how that works. And basically, sometimes, if you're in the right assets, and the right assets are exponential enough, your portfolio will continue to grow even as you withdraw from it. And that's the magical part too. But the total required here would be 396K today. Bitcoin costs you 120K. Tesla 108K, Solana 52K, and MicroStrategy $114,000. That would be, if I was starting out and I had 400K, that's how I would allocate today. Of course, I do it with options and synthetic longs and stuff like that. But anyway, that's kind of where we are. Now, the other thing that I do want to stress, and we'll circle back to the positioning and rotation and pair trading and covered calls in a few minutes. But one thing I do want to stress, and I shared this earlier this week in Patreon, I thought it'd be fun to bring it up again. But this is a cool little chart that if somebody starts investing at the age of 25 and retires at 65, if you cut your burn by just 1% during those 40 years, okay, reducing expenses can have a profound impact on your retirement bag. This will boost your retirement savings by 220 grand and extend your spending power an extra 10 years. It's a double whammy to the good side. And again, more money, more time in the market. So always think about, don't necessarily plan on living. Once you retire, focus on controlling your burn, unless you're ultra high net worth, and then you don't care. You can just spend whatever you want. It doesn't really matter. So hope that helps. Well, a lot of what I'm going to say next actually dovetails into this as well, about how you can actually control burn. Now, Saturn 12. Hi, James. I've been with you since 2021. Thank you. That's when I started. The gains from your KPM and my ongoing learnings have been a gift. Thank you. And thank you too. I am 56% Bitcoin, by the way. Keep your, even though you're not using your real name, which is great, keep your security tight. Sol, 18.48%, MicroStrategy, 14.59%, and Tesla, 10.95%. I recently began selling covered calls on MicroStrategy and Tesla for cash flow, which have been life-changing, and wow, the amount of gain I could make if I had more contracts. If you were me, would you sell some Bitcoin and Sol into MicroStrategy and Tesla to sell more calls? My Bitcoin is very precious and it won't be easy to part from. This is interesting. And fun fact. So covered calls was what made me, starting out in the 90s. And it was just very simple, wash, rinse, repeat, methodical. And I've enhanced that strategy over the years, over the decades. But again, it's extremely powerful, especially if you have a process. Second of all, which is even more fascinating, back in the last bear market, I made the conscious decision for many factors to go into MicroStrategy using options because I'm an options trader. I feel very comfortable with them. And I didn't feel as comfortable with, and people groan as like, ooh, I didn't feel as comfortable with self-cold storage of Bitcoin. Felt it was too risky. If anything ever happened to me, fell off my bike, hurt my head, forgot something, house burned down. That's just way too risky for what I was talking about. So I was much happier with kind of dealing options in my traditional brokerage accounts, which actually was a gift. But the other reason, which what you've nailed on too, is it's very difficult to sell Bitcoin because you know it's going to be worth $1 million if it survives the next 5 or 6 years. How are you going to sell that at 100 grand? And you know it's going to 10x in 5 years. It becomes very sticky. But things like MicroStrategy, being an equity and being a trader, there's less emotional connection, especially if you have something in cold storage. You kind of let it sit and wait. And then it's very difficult to pull out and trade. It's much easier with stocks. So that's kind of where I come from. So hooray there. Second of all, covered calls, the more volatility, the more premium, the more lucrative it can get. Definitely think about adding more MicroStrategy. But let's MicroStrategy for covered calls. It's very, very powerful. But let's look at the chart here. This is MicroStrategy Bitcoin. You can see here it's at the bottom of the range. It's actually flashing a buy on the confidence model here as well. Bottom right green. And so far, over the last, what is that? How many, 4 or 5 months, bottom of the range, buy signal, and MicroStrategy has been flat against Bitcoin. Yes, we had that crazy spike in November after, all the hoo-ha about the strategic Bitcoin reserve and all the other good stuff, and the crazy buying as well from Michael Saylor beginning on the 11th of November. Things kind of got a little bit overheated, and that's very clear from the chart here. But be careful as well, being at the bottom of the range, be careful selling calls against MicroStrategy here. We're now exactly at $300. Odds are it maybe goes up. Tesla, also very volatile. Moves a lot, but the other thing you got to be careful of with Tesla, as we saw as well after November 5th, it had moves fast when it wants to. Like it went from the 200s up to the $480 in a very short window of time. And remember, all major gains happen over approximately 10 or 15 days a year. And this is shout out to Cern Basher as well. That's where all the gains are happening. So most of the time it's chopping sideways. So imagine the middle of this chart here. That's when you sell all the covered calls, but not before a big spike. And you can see exactly when the big spikes are over using things like mean reversion, etc. So bear that in mind too. Now, Solana is another interesting one here. Should you sell some of that to buy MicroStrategy or Tesla? That's also at the bottom of the range. I should have called this video the bottom of the range. But over the last 2 years, yes, Solana has beaten Bitcoin by 160%. And from the bottom of the range, Bitcoin has done a 6x. So you can imagine how well Solana did by beating Bitcoin. But at the same time, this year, in this pair, Solana has underperformed Bitcoin by 10%. So yes, it's lagging. And you can see maybe at the bottom range, maybe it'll fall further. Maybe Bitcoin will go to the moon. We shall see. But the point is, sometimes be careful selling things at bottoms. It's good to rotate them closer to tops, or even in the middle of the range, but not at the bottom. So we'll watch this carefully. Now, I'm going to talk a bit about one thing here, which triggered an idea as I was answering this question, is a thought experiment regarding one thing I've always been very aware of is scarcity. And that scarcity is very valuable. This is a AI image. Thank you, AI, for putting it together, of a Gucci purse that costs $350 to make, but can be sold for north of $5,000 to $6,000 or even up to $40,000, depending on the scarcity of what it is. But then the reason we're in Bitcoin is because it's scarce, and that's the whole story. But I was thinking, what would, Bitcoin and Sol, what would Solana be worth if I appraised it across 25 different ratios using my composite valuation model that I've been using for years for equities and stuff like that? And the answer is pretty alarming, everybody. This is, again, a thought experiment. This is all ridiculous, but it shows you how special Bitcoin is. So come at it from that perspective. Again, this composite scores used to value assets, and I'm just running numbers. If Solana is valued the same way as Bitcoin, based on the matrix below where you see just a snapshot of some of the numbers, the market cap of Solana would be $24 trillion. That'd be 12x what Bitcoin is today at about $2 trillion. And of course, this is madness, but it's a thought experiment on ratios, and it's a thought experiment to illustrate scarcity. The reason we're in Bitcoin is because it's scarce. And that's the fascinating thing about it. So conclusion for you, yes, do it. It's very lucrative to sell covered calls, but beware of Tesla as it pops violently 10 or 15 days a year. Make sure you don't get called out. Make sure you do sell calls after a big spike up. Also, beware of doing things at the bottom of a range. For example, selling calls against MicroStrategy here at $300. Not a good place to do it. Now, we'll talk more about MicroStrategy in a minute, about when it'll hit $400 as well. All these questions bleed together, and that question is coming up right now. This is, and I by the way, I always say as well, billions are made in the bear. For some reason, a lot of people must have just come into the market in November 2024, and they're what you call top buyers. And I understand the pain. You come into a new space, a new asset, and you buy the top, and then it goes down. When everybody is excited and happy, and all of a sudden you're not. I understand that. Okay, but that's why I also say as well, billions are made in the bear. Okay? We are 80% through the bull. Maybe 70%. Maybe there's a 10 or 15% chance we're 100% through the top. Maybe we've seen the top. I don't know. But either way, be careful. So I'm going to answer this question as well. And my condolences to those who were top buyers. It happens every time around. But next time, be early to the party. Load up in the bear. Do not load up when we're 80% through the bull. Warning sign. Okay, this is from Bit of Coin. Hi, James. I'm in a position where I need to sell a good chunk of my MicroStrategy bag. My entry price is $402, and I am planning to layer my sells to limit the damage. Do you think we could see a MicroStrategy price near $400 anytime soon? PS, love your show. Thank you so much. So, first of all, not only is the MicroStrategy Bitcoin chart at the bottom, but also the NAV multiplier is at the bottom. We'll get to that exact number in a second, but you can see here the little red dot across the bottom red line. We are literally way out at the bottom of the range on the NAV multiplier. And again, what this chart shows you is the newest, latest dots are the darkest red, the oldest are blue, and where we've been, how high we've gone. NAV premium is up at 3.5, now it's about 1.65. So it's at the bottom of the range. Now, the other good news is Saylor will be buying, or has bought already. He'll announce it tomorrow morning, probably to the tune of 20,000 Bitcoin, taking us to nearly 500,000 Bitcoin or over, with the 2.3 billion he got from the convertible bond offering. Watch this space. He may have actually ATM'd as well a little bit. I saw that in the chart last week. Later last week, he was ATMing. It looked like, from what I could see. But back to this bottom of the range chart. Here we are. MicroStrategy, again, bottom of the range versus Bitcoin. Where we go next remains to be seen. But people, this is crazy because people do TA on MicroStrategy when really you should be doing TA on Bitcoin, and you should be doing arbing on MicroStrategy versus Bitcoin. All right, because the price of MicroStrategy is a function of two things, and people forget this all the time. Very important. The two things are simple. The amount of Bitcoin they hold with the price of Bitcoin is number one. And two, the NAV premium. You can see here it's 1.649 according to my model, my calculation. That's very low, extremely low. Normally it's a 2. Sometimes it's a 2.5. Sometimes it's 3.5. It all depends. So to answer your question, real simple, per my model, and this has 478,740 Bitcoin, this model will be updated first thing tomorrow morning for the buy and shared with them Patreon. So stay tuned for that. Again, it's a moving target. It changes every time. But assuming this stuff, assuming the NAV premium is 2 and the amount of Bitcoin is what we have there, and the price of Bitcoin for MicroStrategy to $400 is exactly $105,500. Okay? So we need NAV premium to go to 2 and Bitcoin to go to 105K, and then you get $400 price. So we'll see what happens. Feb has not been the typical Feb so far, but we still have a week left, and things happen fast. Just as we saw here, again, a great reminder of where all the action happens. 10 or 15 days a year. If you're not on the train during those days, you miss out 90% of the gains. That's just how markets work. And I don't care if you're talking Tesla, MicroStrategy, Bitcoin, it's all the same. It's all the same. Be on the train for those key days. So in answer to your question, $400, we need two things to happen. Now premium of 2 and MicroStrategy, or not MicroStrategy, but the Bitcoin price to be 105.5. Hope that helps. And we don't know when that's going to happen. Next question, Chico. I wonder if you're from Chico State in California. Thank you for all you do. It's amazing to be part of this community. Thank you for being part of it. I currently own a big bag of GBTC. Should I convert that to MicroStrategy or Tesla? So it sounds like you have a big bag of Grayscale Bitcoin Trust. You're heavily exposed to Bitcoin, I assume. The simple answer is you definitely need some Tesla, and Tesla's at 330 right now, which is very low. It's off 45 from the all-time highs, a lot. But remember, we were also stacking it for a long time at a low level. But first, I want to talk about the impact of fees. You can buy IBIT for 25 basis points. And then other funds have much higher fees. I'm just going to show you an illustration. Imagine you've got $1 million in an ETF that charges just hypothetically a 2% fee on $1 million portfolio. What will that cost you in 10 years? The answer is about $3.63 million. That's a lot. Okay. Now, if you're investing over 40 years, that's like $30 million, everybody. So bear in mind, fees. And this goes back to controlling the burn and minimizing the burn. It's so important in life, so important in investing, so important in getting your path to financial freedom earlier, okay? Critical. You could have a $20,000 vacation. Why not make it a $5,000 vacation and buy a tent and sleep in the woods and have just as much fun with a crate of beer or whatever? You know, you don't need $20,000 luxury hotel with slippers and stuff. Anyhow, just not financial advice, but more life advice. Control the burn. Very important. Next, let's look at where we are in terms of price targets. And again, this is part of my retire on models where I have tons and tons of price prediction models, and I create composite scores and I weight them according to bull targets, expected target, and bear targets. So this is the updated version of where we are right now. If you want to get to have $1 million or $10 million or $100 million. By the way, if you are 30 years of age, you should target having $10 million to retire, because you're going to be retiring probably before 50, but you'll be living a lot longer. So you need to support yourself for 40 years. Okay, so just, again, always think in terms of timelines, always plan ahead. But I'm not going to dwell on that later. If you want me to dig into that further, we can at another time. But these are the Sandbag targets, which actually are not too, they should be pretty much identical to these targets here for retiring in 2032 versus 2029 and how much you need. And again, you can see very clearly, the longer you're in the market, the better you are off. Now, again, these are price predictions. Always go with the bear targets and then start there, add to it, and hope for the best. Any one of these assets can blow up and go to zero very easily. Always be prepared for that. That includes Bitcoin, that includes Solana, that includes MicroStrategy, that includes Tesla, etc. That's why we diversify, even though this is considered high conviction investing. Let's look at your decision what to invest in. Okay, the question was MicroStrategy or Tesla. Let's look at the multiples from where we are exactly today. So I create these multiples going out to 2032, and you can see here, per all the analysis, all the price prediction targets, all the external analyst targets, and mine and my models, you can see here the two winners right now in terms of best risk reward are Solana in yellow. If the bull happens, that's crazy. You get a 38, 39x. If the bull happens for Tesla, you get a 23.68x, 24x. If the bull happens for Bitcoin, you get a 10x. Okay? Sandbag, 8.4x, 8.2 for Bitcoin, 9.2 for Tesla, and 19 or 18 for Solana. And the bear multiple, Solana still wins, but Solana's riskier. But even if you pull the yellow out, you can see across all cases, Tesla wins. And these are sandbagged, okay? Sandbagged. If Tesla does what I think it's going to do, it's going to be a lot higher than this. So I would say allocations matter. follow my allocations I share once or twice a week on Patreon, where I am deployed. Again, my goals are not your goals. I can take on a lot more risks maybe than most people can, but at the same time, you understand how I'm moving, and I feel underweight Tesla right now. But I will fix that in 2025. That's my goal. The big rotation of a lifetime. Next question from Joe Daddy. Hope you're all enjoying the show, by the way. Thank you, CPK. I entered MicroStrategy using the ArbCloud when it dipped under 320 and sold my Bitcoin then. My issue is I do not have enough free cash to flip between the crypto world and the stock exchange. It takes a few days for me to move money back and forth. And I like the idea of letting an ETF do self-custody anyways, as well as MicroStrategy. Can I still apply the same principles of the ArbCloud buying a Bitcoin ETF and back to MicroStrategy using indicators from the ArbCloud? I'm totally rock solid in how ETF prices correlate to the price of pure Bitcoin. I'm not totally rock solid on how ETF price relates, or if swapping between MicroStrategies and Bitcoin ETFs works with this method. Also, I think it'd be more simple for me in my Roth IRA to just keep the money in one place, as I plan to do this in the Roth IRA, which is tax-free account. And Joe, with too many kids, thank you for the question. I got some good news and some advice for you too. First of all, you can definitely do this. But I mean, if I had to deal with your time delay between moving from crypto, moving to cash, transferring, waiting for it to credit into my brokerage account to buy, I'd lose my mind. Okay? There's a thing called Robinhood. I can literally flip 7 digits instantaneously from one asset to another in less than 60 seconds. Okay? This is very important. If you are playing this game, you got to be able to flip fast. Okay? Again, make sure you have your ops up and running. It sounds like you have the Roth IRA. Make sure you have it on a good brokerage firm. I am extremely impressed, and I've got all the brokerage firms you could imagine. I'm extremely impressed with Robinhood. Okay, I have an IRA there I use for a pair trading experiment, which has done very well, and I have a regular fun kind of brokerage options playing account too. We're also for fun, but it's also good. Now, let's talk about this. The my quick update on the MicroStrategy on ArbCloud. You can see here all these green dots are when we dip below the cloud, and that's when you sell your Bitcoin from MicroStrategy. Going back to your question here, you sold your Bitcoin then, but you haven't been able to come back, all right? Which is actually, depending on exactly where you are, that is actually a good thing. You sold your Bitcoin, MicroStrategy is now cheaper. So you can actually get more MicroStrategy than what you could when you did sell it, which is probably like at the 330, 320 level. Anyway, the point is, these are the points at which you sell your assets for the other. When MicroStrategy is deeply oversold, you sell your Bitcoin for MicroStrategy. When MicroStrategy is deeply overbought, you sell your MicroStrategy for Bitcoin, and vice versa. And you can see here, since, the last 2 or 3 months, you could do this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 times. And you can make a killing. We are absolutely getting close to the finalization of a rotation model. So you got like the ArbCloud will have a rotation model that'll tell you across 5 assets when to swap into them. It's been years in the making, and it's really, really tricky to crack the code on this one, but we're getting close. So hopefully it'll be out real soon. Anyway, the point is, yes, you can do it. Now, the other point of your question, try to get everything into one house, one brokerage firm. You need margin so you can flip. You can drop 100 grand of MicroStrategy, immediately get credit and deploy it into IBIT. This is the Bitcoin over IBIT chart. And you can see here, consistently for the last year or more, you always get 1,756 shares of IBIT for every Bitcoin. So if you want to be a whole coiner, you need 1,756 shares of IBIT. And you can see here the 200-day moving average chart I added there, a little red line. It has not changed, okay? Even though they only charge 25% basis points for fees, it doesn't really matter. And putting this chart together and thinking about your question, it made me think of a new play, okay? This could be playing the ARB on the ARB. So within, let's say, IBIT and Bitcoin, there's often a tiny lag between prices, Or if you're really clever, if you see, for example, let me try to get this calculus correct in my head. Imagine Bitcoin is extremely oversold, okay, at the end of the market day when this thing is trading, which means it's going to rebound up. That's a good time to be on the boat. But if you think Bitcoin is extremely overbought going into the close of the market, then do the opposite. So think about that as well. So there is a tiny little ARB potential, because you can see here, blowing this up, the number of shares varies from 1756, sometimes as low as 1700, sometimes as high as 1840. There is that volatility within IBIT and Bitcoin. So maybe you can play that too if you get real clever. Again, everything is possible. It's all fun and games. So hope this helps. Don't forget, get your structure, your operations in order, and then start doing this heavily. But the way you're geared right now does not work. You need to be able to change instantaneously. Next question. Grüezi wohl. Grok 3 claims to be, that's our friend, 100 TC euro in Switzerland. Claims to be the smartest AI. If true, would it make sense to look at Twitter X stock or gains we've made only holding XAI shares? So this is super interesting. XAI has, and the XAI and Twitter are kind of separate, and XAI is kind of hard to buy, but we'll talk about a couple of things regarding you're on the right path about Grok. Okay, Grok is coming to Tesla vehicles, so XAI will become even more valuable, making Tesla vehicles even more valuable. Imagine being able to sit in a car that drives you around and have conversations, or have it make movies for you, or answer your deepest thoughts. It's incredible. That's coming real soon. It's supposed to be in the Cybertruck in a week or two, by the way. Also, Elon's XAI, when it launched, it's actually smarter now than it was a week ago. It basically beats all the other platforms, Gemini, DeepSeek, Claude, GPT-4o, etc. And it's faster, real faster. And it gives you way more detailed responses too. Like if you're like a PhD scientist or something, and you want to get real deep into a topic, it does all your work in 60 seconds. So it could take you like a year or 2 years to write a thesis. It'll do it for you in 60 seconds. It's bonkers time to be alive. Crazy. Anyway, let's talk about where you can buy XAI online. There is a platform called Hive with 2 I's. And you can see here, it was selling on occasion. Right now, there are no listings. In the past, the highest bid was $250. And the last time it traded, I think, was $108, $107, something like that. But you can see the price is up and to the right, and it's doing very well. It's up from, what was it, $15 6 months ago. So it's moved a lot, and that's because of all the development. Now, but it's the leading AI system. So I like the way you're thinking. Is there a quick way to get access to XAI? Let's look at one way you can do it. That is the ARK Venture Fund. They have 63 holdings. They are 17.6% SpaceX. They have 0.7% Tesla, 0.7% Palantir, and 0.8% XCore. Not XI, XCore. And they are 1.5% XAI Corp. So you can see they're both very different. You got Twitter, which is X, and their bag is 0.8% of this fund. And XAI is 1.5%. So they do have exposure. That's a little typo on the chart there. There should be 1.5%. But the point is, they have a tiny allocation, which won't really get you where you need to go. But the good thing about this, if you add in the synergy between these companies, you know, Tesla 0.7%, X Corp 0.8%, and XAI 1.5% or 1.5%, and SpaceX 17.6%, you got 20% into some of the most important companies in the future of the world. So that's one option. But remember, there are fees. I think it's a 2.5% fee for this ARK Venture Fund, but it has some good holdings. Too many weird ones. I don't know why they have Roku and stuff in there. It's beyond me. But that's their thing. But that's one way. The other way is to be an accredited investor and then get access, but you need $1 million plus to be able to spend of net worth. And I think 300,000 of disposable income if you are a married couple. I forget those details. They change every year anyway. But conclusion, what I would do is, considering the leverage between assets, the cheapest AGI play in the world is Tesla. Just buy Tesla. Don't overthink it. You get the value of XAI through Tesla, which is the most undervalued AGI stock on the planet. Remember, these cars will have Grok in it. Twitter has Grok in it. There are other companies we'll talk about in a second that are now using Grok. Okay, so just keep it simple. Yeah. And also, when you look at the relative valuations compared to other competitors, I believe XAI is fairly valued right now. But the question is, how will they get more value? And we'll talk about that in a second. This one ties into exactly what Grok is doing and AI. And I love the tapestry you all weave for me every single week. Makes me think. From PG, James is ethically minded and therefore doesn't invest in defense, pharma, tobacco. If he wasn't so ethically minded, are there any stocks in the above categories that he might be interested in? Yes. Great question. And if you know me, I only invest in two things. And that is basically crypto and AI. That's it. I might dabble in things, but they are somehow tangential to AI or crypto in some way or another. And that's just my thing. Now, the answer to the question is pretty simple. People know it's probably Palantir. The reason I did not like Palantir, and it has done bonkers well, and I'll take the hit on that. You know, I appraise things based on fundamental valuations, and this thing has run out of control. But there could be some headwinds. But the reason I didn't like it in the past is because of privacy violations. It's considered a spy agency. Government overreach, I don't like. Military ties, defense contractors, warfare role, I don't like. I don't like war. I don't like murder. I don't like people dying. Data misuse risk, the CIA-backed origins. Actually, the history of Palantir was actually started by CIA. Ethical issues, clash with investor priorities, and limited commercial appeal. I remember Amazon balked at working with Palantir, and that gave me pause too. But then this happened. And of course, the price went to the moon too. But guess what? Palantir just partnered with XAI to use Grok 3. Palantir has brought Grok to the enterprise, and it's now officially available in AIP. And this partnership is a win-win for both players. Rarely partnerships work, but this one perhaps does. It's a huge stage for Grok 3. It boosts its credibility. It leaves all the other AIs in the dust. And Palantir supercharges AIP for defense, enterprise, healthcare, finance use cases, etc. And Palantir stock could spike if Grok delivers, and it could go to $130 soon. But the high valuation is a concern, and AI is not a slam dunk. However, it is a validation rocket for XAI, and it could really help Palantir. Okay, now, despite all the bad stuff, I still don't invest in Palantir. But let's look at Palantir, because a lot of people are asking about it. Is it worth it at this stage? Well, I cannot remember the last time I saw a PE this high for such a big company. Palantir's latest financial reports show a price-to-earnings ratio of 1,718, which is really high. If you go back to the end of 2022, it had a PE of minus 33. So that's pretty insane. And Palantir Guru Focus value is $19.84. So, but maybe, you know, AI is revolutionary. AI can change things radically. And this could turn Palantir on its head and take it to the next stage. And again, it could go up. We don't know. But it's expensive. And when I compare Palantir to Tesla, Tesla's a lot cheaper as an AGI play. Next question is an easy one. From Cookin. Hi, James. If Solana never existed, would you still be holding ETH? Brilliant question. So I started my journey in looking for the ETH killer in 2021 because I had an ETH bag that I all bought in one day in March 2020. And then I discovered, wow, this thing is special, but how do I protect it? Or is there potential for ETH killer? And that's why I started building SCP Profiler, Crypto Compendium, all that stuff to identify the winners. And if Solana did not exist, I'd be in SUI because that is the second best. That's the next best thing. Now, I have both SUI and SOL, but my SOL bag is a lot bigger because I got in a lot earlier at a lot less cost, and that's just how it works. Now, if we look at a face-off between SUI and Solana, you can see here, Solana smokes it across the board. It's got 140% more speed. It has over 1,000% more transactions, got 300% more users. It's got 211% more daily transactions per user. It has 11,000% more fees, got 3,500% more daily fees. Cheaper fees, actually. The average fee is 11,000% cheaper than SUI. And it has nearly 400% more developers. And in terms of the relative composite valuation, Solana is actually a lot cheaper than SUI. But SUI has the advantage of unit bias because it's cheap. It's like $3 versus Solana, 170. And people like to buy the cheaper asset. But in valuation terms, no. That's always not the way to go. So the other point about this one too is when Firedancer launches, that's game over. And it's kind of launched in about 8 different places right now. They're testing it slowly. So I hope that helps. Thank you. Cooking. I want to pronounce that. Thank you, Cooking, for the question. Now, this one is a tricky one, and I will spend some time on this because this is about, I used to always propose for decades a 3-legged stool, different assets where one of the legs of the stool was always real estate to generate perpetual income. It's safe. It goes up over time. It generates tax write-offs. It's nothing but goodness. But things have changed. Now, this is going to be a deep one. But if you're into real estate and you're considering buying a castle, this one is for you. And again, it's deep. So warning you all, this is from Haas Subs. I'm 32 years old and currently have a $2 million mortgage on my dream home, which my wife and I consciously chose, understanding the sacrifices involved. I have a 30-year variable mortgage at a 6% interest rate. I don't know how you have that because it should be a lot higher if it is variable. So we'll get back to that later. My question is, should I focus on paying it off quickly, or would it be wiser to stretch out payments over the full term, considering the ongoing debasement of currency? And is there a specific interest rate threshold where one clearly outweighs the other? And for context, I also hold strong investments in assets like Bitcoin and Tesla, and your wisdom on this matter would mean a great deal for us. Well, thank you for the question, and I like these questions. So, this is some stuff going on in real estate, and I'll set the stage with what's happening in the world too. We have a triple squeeze on returns, right? So mortgage rates are very high. You say 6%, I think it's 7%, but that remains to be seen. And if it's variable, it has to be closer to 7%. And this is affecting new buyers. And a lot of people have locked in low rates. Anybody in the Patreon community that was there in 2021, 2022, locked in like 2.5% interest only 10-year fixed rates, which are killer to have. First question, answer to my threshold is about 7% on a mortgage. That's kind of like the top level where it doesn't make sense. Also, depending on where you are, property taxes are going through the roof due to higher valuations, etc., which is making things very costly. And insurance costs are exploding. Okay? In California, my insurance is 4x'd in the last 4 years. 4x'd. PG&E, 4x'd. Garbage, 4x'd. Water, 3x'd. The costs are getting pretty insane out there. And I've got the receipts if you want to see them. Let's talk about, that was the triple squeeze of how things are getting high. Now we're talking about the cost of rental versus home ownership. The home ownership now is very expensive, but it goes in cycles. So if you go back to 2020 when interest rates are very low and everything was kind of fine, before prices of real estate started going up, it made sense to buy a house. Now I'm not sure. Again, I'm going to give you a market that I know intimately. It's San Francisco, California, and these are all real life data from there. I don't know what part of the world you're in, probably in the US, and it's over a $2 million home. For this analysis, I'm assuming it's $2 million. and the interest rate 7%, and the city is San Francisco. But you can rent a $2 million home now for $6,000 a month. Okay, annual cost of renting 72 grand. Now, if you buy a home for $2 million, you got to put 20% down, sometimes even more, because mortgage bank doesn't want to be carrying the bag, 80% bag. So I don't know what you put down, but what's very important is there's a huge, and that should be 400,000 opportunity cost. You put that down on a property, that means you don't have 1,300 Tesla shares that you could have had instead, which will go up a lot more than your real estate. That's the opportunity cost of the down payment, which people just pay it down and they forget it's even there. They think it's disappeared, but there is a cost associated with that. Also, annual mortgage payment is 7%. Your mortgage payments will be $128,000 a year, and then your property expenses are nuts. So this is the model. This is the rent versus buy model. I'll share the updated version on Patreon later, so you can do your own research. And this has been around for years. I actually built this years ago, and I've been using it for decades. But now it's in Google Sheets. But the TLDR here is real simple. A $2 million home, all real data, equivalent rent, etc. It also includes the opportunity cost of the down payment, assume 7% mortgage, property taxes 1.2%, all that type of stuff, maintenance 2%, blah, 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 which depending on if you do it yourself or other people. So I put that in at 30 grand a year. Utilities, 4,800 a year. Insurance, 6,000. And that's if you can even get it. I guarantee you, a $2 million home will probably cost 10 to 12,000 now. And that's just the way it works. So if you compare all of these outgoings, you're spending 192,000 on all of these outgoings, but it gets more than that. Your rental would be 72 grand. But if you take into account your tax credit of mortgage interest, 38 grand, you write that off. Also, your opportunity cost of capital with the 400K down is 29,000. So they basically net each other off. And therefore, your living cost per month is $18,428. Living cost after tax credit on income from mortgage interest, $15,200. Compare that to renting for $6,000. Your savings from renting versus buying is $9,234. And again, you can model this out yourself with your wife and figure out where you go from here. But my concern in this day and age, and this applies to everybody all over the world, if you are in Australia or Germany or the Netherlands or UK or Canada, doesn't matter. There are challenges coming. First of all, demographic challenges. I'm worried about the younger generations. You are a millennial. You are 30, 32 years of age. The aging population hold all the valuable homes, okay? Especially the multi-million dollar, the $2 million homes. I believe this market will be disrupted, okay? Younger generations face huge affordability issues due to stagnant wages, debasement, high mortgage costs, high housing costs, high insurance costs, high property taxes, and it's a real problem, okay? Now, my concern is this will only get worse in the future. Again, I'm not going to sugarcoat anything here. That's why I do these videos, to try to save as many souls as I possibly can. It's better to be forewarned. Forewarned is forearmed, or whatever they call it. But the point is, who's going to buy all of the wealth? So when you look at this chart, the boomers have all the wealth. The millennials don't. Okay, the boomers have all the money. So if you look at this chart, it's like a year or so out of date, but they have nearly 60% of the wealth, probably gone higher. Generation X has about 17% of the wealth, and the millennials have, well, you can see they're 5%, 4% of the wealth. Who's going to buy all these properties? Now, there is a theory that the baby boomers will them to the Generation X, but then taxes will eat some of that too, and the wealth will disappear. Some baby boomers may leave their inheritance to these millennials. I'm not sure what the case is, but either way, there's going to be a glut, I believe, in North America of $2 million plus homes, and nobody will be able to afford them. Therefore, the price of those things will come down. So you'll be able to buy a lot more real estate for the buck in the future, if I'm right. I've been right so far about this too, because I already see it happening in California. If you are in a high-risk zone, nobody wants to buy a property because they can't get insurance. They can't get mortgages. Without insurance, you can't get a mortgage. It's like triple-edged sword, just really bad all over the place. Now, my fears, again, back to you and your situation. If you are killing yourself to pay off your mortgage and that leaves nothing on the table to invest, I would be terrified. You did say you have Bitcoin and Tesla bags. I don't know how big they are. But if they are small compared to your real estate asset of 2 million plus, you're overexposed to real estate. And that would give me pause. I would consider downsizing if you can. It's nice to have a multi-million-dollar home. I get that. But it's also a very big overhead. And the question is, if you hold it for 10 years or 20 years, it may still only be worth $2 million. It's not going to appreciate like other assets. So I hope I'm being very clear here. And again, I feel like I'm throwing another bucket of ice on somebody, but the opportunity cost could impact you as well. Now, what you can do is downsize, invest, wait 5 to 10 years, then get your $2 million home for a lot cheaper because nobody will be able to buy them. So it's like, again, it's like a big swing trade over a 5 to 10 year period. You ride the train that's going to move fastest, make your money, and then enjoy your lifestyle chips. Hope that makes sense. And just to share as well, the $400,000 down payment, if you are only 20%, you're probably a lot higher, is 13,333 Tesla shares. And this Tesla bag could be worth 3.6 million by 2029. And that's sandbagged, by the way. Sandbagged, everybody. The Tesla CAGR is 52.7%, and your real estate could still be worth 2 million. So again, think in terms of the opportunity cost. If you have a $2 million bag of Tesla, and you have a $2 million bag of Bitcoin, and you have a $2 million house, I'm okay with that. But if it is skewed towards the real estate, I am not. I hope that's clear. I wanted to share that because it's so important to everybody. Allocations, probably the most important thing in investing. And then the opportunity cost of not investing, or the opportunity cost of not being in the market long enough, is bad and very costly. Like we mentioned, cut the burn, invest, not financial advice. And best part of the week, thank you all as well for helping with the animals. This week we donate to Beans. He is a wolf dog. I would love to get a wolf dog, by the way. They look amazing. And Beans is one of the sanctuary's most affectionate rescues. The only thing she loves more than being at the center of attention is finding a nice shady place to rest. It doesn't look like she needs much shade in the snow there. But anyway, thank you so much for this. And hello, Beans. Hope you all like wolf dogs. And DCA tomorrow is on. I am moderating, so it'll be a good show. I hope to see you all there tomorrow morning. And don't forget to hit the like. I'm going to do some live questions right now. This show was called Control the Burn. Always control the burn. It is. If you learn one thing today, that's it. Allocations and control the burn, and be on the fast train at the right time. And then when you make your big bags, then you can live high on the hog, as they say. So I hope this was a very deep episode. Hope everybody's still with me here. And let's get some live questions. Over 5,000 people watching live. Woohoo. Thank you all for coming. We have Shark Lover. Thank you so much for the animals. And I love your handle. Doc Intern. How about an IA meetup at the Austin Grand Prix this year? Thanks for the nonstop, life-changing NFA. You know, I spent a lot of my life watching Formula One Grand Prix at all the big places. Monaco, absolutely my favorite. I didn't snuck in. I went stealthily to the Vegas F1 Grand Prix, and I was wearing dark glasses and the hat. 2 people saw me. That was it. So it was at night, so it's easy to hide. And but I tend to be very off the grid, very whatever. But yeah, I would love to go to the Austin Grand Prix, but I don't have the time because I have to work every single day. Every single day. That's my commitment. Unless, of course, the bull market's over. Then that's a possibility. But yeah, thank you, Doc Intern. You rock. Moto89. Is MicroStrategy a good buy at 300? Yes. From the charts you've seen, the NAV premium is 1.64. We are bottomed versus Bitcoin. For now, can the NAV premium go to 1? Yes, it can. If it does, the price could fall to $200. But that's unlikely. And also remember, they're doing CBOs right now, convertible bond issuance, which doesn't ATM the stock to death, which is what we've been through. So I do believe the NAV premium will float up from here. So Moto 89, remember, it's risky, but I think Bitcoin will go up. I don't think we're out of the bull market. And I think, as I analyzed earlier, if the NAV premium goes to 2 and Bitcoin goes to 105,500, we get to $400. Stephen ONPS4, I'm interested in option trading or doing covered calls or synthetic longs. What are the next spots going to be available for courses? Even though I know you don't sell them. I don't do courses. I don't sell courses. Hang out in the community. Ask the team. We have a whole cottage industry of people that help community members. And they do their own thing. They build their own businesses and enterprises. And that's a huge part of what this channel is about, is helping people gain their financial freedom. So I don't even know anything about that side. They're out there, but we have at least 4 people, maybe adding a 5th real soon as well. But remember, options are cutthroat. You've got to be really dialed in to play with those things. Covered calls, that's where I would start. Do it real simple. 100 shares or something, around $20. Play with it, have a process, have a model, get really familiar. Then don't ever think about going into synthetic longs unless you have mountains of margin and you really know what you're doing, because that can wreck you too. Just like a perp on crypto. Don't do that. So start small. CPK 2001. At age 70, looking for capital preservation, would you recommend ATR in lieu of profit-taking model, which I have? Well, the thing is, the whole bundle right now comes with everything. So buying a la carte, I think if you're buying profit-taking and ATR, you might as well just get the whole suite and get all the different tools, and you get the rotation model as well. Have a look at that. For capital preservation, if you have a tax-free account, definitely get both or get the suite. If you're heavy in crypto, focus heavily on the profit-taking model. It's designed to help everybody maximize getting out of the bull intact, not doing the mistakes of the past. So yeah, and just make it an occupation. If you spend the time in the community learning from everybody, and they can learn from you too, that's what makes the Patreon community very special. We have gurus in there as well. So CPK, spend the time, make it an occupation, make it like an office job. You get up at 6 in the morning, study the markets, study the models, study the charts, start paper trading, start looking at your allocations, and be really, really process driven and disciplined. Then you'll be very successful. You got all the tools. JV Fender, thoughts on CYFRF going forward? Do you see this thing being listed in Robinhood in time with options? I'm not sure. I think they got listed in NASDAQ. I haven't been tracking it that much. But yeah, once they get on NASDAQ, they'll be on Robinhood in no time. And then once they're established with certain amounts of minimum market cap and volume, then they get options. I don't know where they are in that range at all. I do own CYFRF, but it's like a 1% position or something in my portfolio. And thank you for your super sticker, Martello45, CERN Dragon, AZ Rolfa, The Great Escape, Silicon Valley Stoic, Signal 103, Forest M, Swiper No Swiping, Santos Saints. I hope that show wasn't too hard-hitting today, but is full of very important ways in which you can accelerate your path to financial freedom. See you all tomorrow. Thank you all. Thank you as well to the mods, Sean Donnelly, K8, Team D Tesla. And at that, I'm losing my voice. Good night.